We're half an hour away from the opens in Hong Kong, Shenzhen, Shanghai. You're watching The China Show. I'm Annabelle Droulers with David Ingles.
Let's get to your top stories today. Asian assets in a tight range this Friday as the Fed's hawkish pivot will continue to weigh really on U.S. stocks, bonds, and risk assets, generally speaking here. We are also on intervention watch across the Chinese currency with record lows in sight for the offshore yuan.
Plus, we hear exclusively from the Philippine Central Bank Governor Eli Remolona on the peso, the outlook for Fed rate cuts in light of the Fed moves next year.
And I'm Min Lo in Macau as Chinese President Xi Jinping is in the city to mark the 25th anniversary of the handover to China.
Good morning and welcome to the China Show. What better way to start the final show of the week, final session of the week, and wrapping really this manic week of central bank action with an update here on prime rates and the rate change in China where, well, the absence of that, 1- and 5-year loan prime rates unchanged at, respectively, on your screen, 3.1% on the shorter one as expected and 3.6% is where we are on the 5-year loan prime rate. Now, all that being said, of course, it's still around intervention watch, the currency, and whether or not they step in firmer here to at least anchor the currency, given the broad dollar strength here, Bill.
Yeah, absolutely. I mean, easing does seem to be on the table. Maybe it's not on the table today. Maybe the PBOC is a little bit more interested in protecting those bank margins at this point in time. Right. But still, undoubtedly, there is that expectation. In the meantime, though, depreciation pressures on the Chinese yuan. I mean, you've got probably not too much of a barrier in their sight for now. But let's take a look at what we're expecting broadly for Chinese equities in the session today, because yesterday, actually, we did see some gains. Today, we were setting up for a little bit of weakness, but kind of just tracks again what we had in the US overnight. It's still that digestion of okay, Fed easing, yes, it's expected, but it was sort of a hawkish cut because it's less Fed easing than had been seen previously. So 2 cuts being priced in instead of 3. Let's take a look at generally how that's faring in the session so far for Asian equities. We're a little bit in a tight range in the session so far today. So we've got shares, for instance, they've been sliding this morning in Korea. Australia's down 1%. Taiwan's just come to online to the downside. Nikkei is trading a little bit flat. And I think if there's sort of a theme or story that we're tracking as well, it's not just about the Fed, it's also the BOJ. And we did see them holding and they want sort of more signals. But I do sort of wonder, I mean, the signals continue to stack up. We just had, for instance, the core inflation reading picking up for the first time in 3 months this morning, 2.7 on that. Again, it's another signal that price gains, they are continuing to take hold in Japan. And you're sort of seeing that the Japanese yen also a key watch today.
Yeah, and you got to wonder, certainly. I mean, I think we were at 153, 154 on dollar yen this time. Yesterday, lo and behold, 157, 158. It really underscores to Bell's point, right? And while other central banks are, busy doing their thing as they should, it's really the central bank and almost this reluctance. If you would almost feel the reluctance to cut interest rates. Now, as the dust settles on what's really been a manic week, as we were pointing out, I think we've had at least 15 monetary policy decisions this week. Looking at the current pricing across these markets, the deepest cuts. Can we go back, please, to the other graphic there while we talk about the dollar? Can we go back, please, to the other central banks? Thank you so much. The Fed is expected to go at least maybe 2 or 3. The deepest cuts are in the ECB and the RBNZ currently. That's based on current pricing in the swaps market. And what that means is this dollar strength that continues, and we've already given you the secret sauce here. 11 out of the last 12 weeks of dollar strength, virtually every single day this month, the dollar has strengthened right now. And that likely means our broad gauge of Asian FX, and we're, I think, very close to 0.5% to the record low, we might actually get there sooner than you actually think. The lowest level here on this currency gauge going back to effectively 2006. Ben Emons joins us right now, Chief Investment Officer at Fedwatch Advisors. Ben, good morning from the Asia Pacific. Bloomberg Dollar Index, 1,300. Dollar Index, 108. How far do we go to the upside here, short term on the dollar, Ben?
Yeah, good morning, David. Good morning, Annabelle. It's definitely back to the fall of 2022, right? When we had this Fed that had to move away from a slow pace of tightening at that time to something different. I think that's what happened yesterday, David. Powell said it as much, right? We're in a new phase, a different phase. I think that's what's strengthening the dollar currently because people are extrapolating from it like you may not be able to ease any further from here for the time being. And there's some trades coming through that people are trying to bet on that maybe the Fed has to raise rates again. And that scenario, raising rates, it just lift this dollar to, I think, on the dollar index easily to 110. That we could see that near term, especially in this very illiquid environment at the end of the year. As you could tell from the yen, as you were talking about it in the start of the segment, it's just not much going on there in the yen in terms of trading. Right? It's just gaps really higher quickly. No matter what they say, verbal intervention type ways, the market only get a gap higher, so that's going to drive this dollar index easily to 110, my view.
What's the level of certainty, though, or potential that we can sort of ascribe to any scenario of tariffs, for instance, that are put on, the amount of tariffs that are put on, the market reaction, how the Fed moves? How much certainty do we have, or lack of certainty, going into 2025?
Well, Annabelle, I think that we got certainty from President-elect Trump immediately right off the bat out of the election. Through social, he announced these tariffs, which is different than back in 2017, 18 when he did that later. And then if you look at the exchange rates, if you think of what we call the real effective exchange rate, which is actually the exchange rate adjusted for price levels between countries, Mexico is already down 22, 23%, sort of reflecting that tariff expectation. You see the yuan down in sort of like about 4 or 5%. So that's getting close to that 10% universal tariff. And there's other currencies are pricing in this too. So we're seeing divergence really building in the FX market. I think with what people really believe, though, that these tariffs are just going to be announced right after the moment after the inauguration. And it will still take time to implement, which just be announced, and the currency markets are preparing for it. So I think we can, from that perspective, say the market is getting pretty certain. This is just the new regime, and the Fed also starts to react to it. And I think that only adds to the divergence in the FX markets playing out.
Ben, something that markets are probably not positioned for is a rate hike, just underscore, a rate hike from the Fed. Is that something to at least consider late next year, if not in 2026?
So it's interesting, David, is what the change was yesterday in the SCP for the core PCE number and the PCE index. That was the largest single change they made in their forecast, I think, ever since they started publishing the SCP. And I found some data on it from the Fed Deal Book that they showed some other SCP forecasts. You have to go back really to the 2000s where you see that kind of adjustment forecast. And the fact that they made that, I think, was to get ready for potential impact on inflation from tariffs. And if the economy continues to strengthen, as we're seeing coming through, and then the Fed has potentially going to be in a position that it may have to raise rates to keep inflation under control and not getting then ultimately that spill over to unemployment, that unemployment rate starts to rise, because then you get the wrong combination, the stagflation idea. So it's not improbable. If you listen to Bauman, who's been the only lone hawk on the FOMC, continue to repeat like, if inflation goes too high, we're going to have to raise rates. And you're seeing in the dot plot yesterday, people already bailing out on rate cuts altogether, right? Several of them. Then you can tell, like, there's a possibility. And I think it's not improbable for next year to have that chance of a rate hike.
And so if that's the sort of environment that we're going into, or there's the potential for that, what's your recommendation around how to invest?
As I mentioned, Annabelle, it's an environment where you're going to get the winners and losers back. So you're seeing it playing out in the currencies now quite quickly. So if you then look at the local stock markets and bond markets, to some extent they're reflected too, right? So we're obviously not going to see the winners in the treasury market, somewhat like higher yields. We'll probably see somewhat better performance in some of the emerging markets against the stock markets in itself. But the US, again, I think will be the leading market relative to other markets at this point, simply because we're going to not only use these tariffs, but we're going to try to drive all this investment into the United States. I think the market will continue to price that. I think that's how to play it at this moment. So central is the US markets with long dollar position, whereas not being in treasuries against probably somewhat opportunities in, I think, in Asian emerging markets to take advantage of the current environment.
That was Ben Emons, the Chief Investment Officer at Fedwatch Advisors. Thanks so much for joining us this evening. And we've got a very strong lineup of guests just coming up. In a couple of minutes from now, hearing from the BSP Governor Eli Remolona. That's after the central bank, of course, cut rates yesterday. We've also got the outlook for AI trends and the race between the US and China with Genju Scott, who's joining us at the bottom of the hour. Plus, what's happening in the Hong Kong restaurant scene as we approach the festive period. We've got the Black Sheep Group joining us in the next hour as well. Counting down to the open of trade in Shanghai, Shenzhen, Hong Kong. We do have futures guiding for a little bit of a weaker start. And again, that LPR decision there, rates unchanged for December, as expected. More ahead. This is The China Show.
Today, San Francisco Fed President Mary Daly sits down with Bloomberg Surveillance for an interview on the latest Fed rate decision. Tune in today at 7:30 Eastern, only on Bloomberg.
Right, welcome back. A quick glance at, of course, we've been talking about the FX markets and this dollar strength that has up until right now proved unrelenting, and the Philippine peso on your screens, 59 handle on the currency. We've had a rate cut out of the Bangko Sentral yesterday. What does the rates outlook look like going into 2025? Joining us exclusively out of Manila is the Central Bank Governor, Eli Remolona. Good morning, Governor, and again, thank you for joining us. I wanted to ask you about rates ahead, but since we talked about the currency, why don't we start with that? I'll ask you directly. Are you guys, how active have you guys been in the markets recently?
We've been more active than usual, but not that active.
Okay, understood. Now, I understand that you do not, and you've repeated this, you do not target specific exchange rates.
No, we don't.
Suffice to say, let me ask that another way as well. Would you, if the move above the 60 handle is smooth and slow, would you be comfortable with that move?
Yes, I would say so. We're more concerned about the volatility than about the longer term depreciation. As you know, it's not a weak peso; it's a strong dollar.
Right. It is. That is correct. I can't even think of a currency that's actually gained against the U.S. dollar of late. I think the peso is actually mid-table compared to some of your peers. Indonesia, we've talked about that here on the show. Chinese currency.
That's right. Yes.
But the other part to that too is, a weak, let's just say a peso at 59 is inflationary. Is there a point that you think, I know you don't target an exchange rate, but is there a point you think that it becomes too inflationary for your comfort?
We actually, David, we look very closely at that. There is the pass-through. There is the point when the depreciation of the peso becomes inflationary. There's a threshold for that, David. A little depreciation is not inflationary, but at some point it becomes inflationary. And we monitor that very closely.
So, Governor, can you share more details on the point that it does actually become a problem?
Well, I won't give you a number, but in the second quarter, for example, when the peso was depreciating significantly, it took 2 months before we crossed the threshold.
The context, though, or the outlook for the dollar is still that we continue to see that dollar strength continuing, at least for the next few weeks. So what are you monitoring, and what's your level of concern at this point in time in the face of, you said, it's that story of King Dollar?
Yes, Annabelle, we're in a new territory, Annabelle. So we're doing it day to day. We're re-estimating our thresholds and re-estimating our pass-throughs every day.
And so what's sort of when you talk about more details on re-estimating those thresholds and that new territory, share some more color on that maybe.
We look at the exchange rate, the currency market in several ways. We look at how the peso moves over time, how volatile it is when it moves, and then we also look at what we call support levels. We look at the levels at which investors take profits, and then we look at the levels at which they do stop loss trades, and then we try to intervene at the right moment.
Okay,
so it's a complicated. It's a complicated playbook.
Yeah, with a lot of moving targets, and I think that goes into some of the risks that the central bank has flagged yesterday. Upside risks to inflation, to be more specific for our viewers. And I want to understand now given the current information we have right now, Governor, what do you think the appropriate level of easing would be from the current level on your interest rate to this time next year?
Yeah, so looking at all the data, what we've decided is that we more or less stay in the same trajectory. So as you know, it's really two decisions. It's a decision on the policy rate, and then it's a decision on the trajectory. We decide to ease on the policy rate, but it's more or less going to be on the same trajectory as before.
Okay, I'd like to clarify that, because when you say same trajectory, you've cut rates, correct me if I'm wrong, 3 straight times. So we get 3 straight times next year, just to clarify that on the policy rate.
Well, it's not the trajectory of the last few months. It's a trajectory that we've described in our forward guidance. So it's a trajectory going forward, and we haven't really changed that.
Understood. How restrictive do you think policy rate is currently?
It's one of the things we look at very closely. I think we're still somewhat restrictive. This is because we've been easing in baby steps, and that's on purpose, so that we can buy insurance against a possible rise in inflation, especially a rise that's unexpected.
Understood. And Governor, would you say, given that inflation, I guess to your point, upside risk is the problem more than the opposite, would it be accurate to describe the central bank's attitude towards easing as more cautious than the other way around?
You mean less dovish than
Would you be
before?
leaning more toward... yes. Would you be leaning more towards less hikes than more hikes? More cuts, rather.
We're leaning towards more cuts than additional cuts. I wouldn't say more cuts than we were leaning to before, but we're leaning towards additional cuts in 2025. That's our trajectory.
So can you compare the outlook for easing? Governor, can you compare the outlook for easing at the BSP versus the Fed? Because, of course, there were shocks this week when we saw fewer cuts being foreshadowed by Fed officials.
Yeah, for the Fed, the statement as well as the press conference suggested that they're less dovish than before. We ourselves are neither more dovish nor less dovish. We're still on the same trajectory as before.
So you're saying, in terms of your outlook for easing, then, you're not going to be necessarily tracking what the Fed is doing very closely. You're still independent of the amount of easing we see from the Fed next year?
More or less, Annabelle, although what the Fed does will spill over into their economy and into other economies. It will spill over into their exchange rate, so that the inflationary effects of that we do take into account, but we don't directly look at the policy rate that the FOMC sets.
Understood.
We look at the implications of that.
Your assumptions then on where inflation goes next year. I understand, of course, it's still within the policy, your target range, to put it that way.
Yes.
To what extent to the upside because you have flagged repeatedly upside risk to the inflation. To what extent,
yes.
what is the worst case scenario with the information you have now on inflation in the Philippines next year?
Well, we focus on the core inflation rate.
Sure.
And that's, we see that coming down next year and going up slightly in 2026. And that's a big part of our decision. Now, in terms of the risks are hard to evaluate, as you know, David, in this environment. But we worry most about whether those risks lead to a de-anchoring of inflation expectations. Then it becomes hard to manage, and then we have to do something more dramatic. But otherwise, I think we'll be comfortable with just baby steps in terms of easing or not easing.
Right.
Does that make sense, David?
I mean, it does certainly, and I think the message that you're giving out here is that there are lots of moving parts out there, and you will proceed as is until otherwise. Let's put it that way. I need to ask you about what's happening in politics, and while that's not your mandate, and I'm wondering whether how the Monetary Board is taking into consideration. To be honest, a lot of the headlines coming out of Manila are quite dramatic, and I'm wondering whether that in any way affects the outlook on not just rates, growth, for example, and the ability for the government to push through some of the economic measures.
Yes, yeah. We read the same headlines, David, but we're still working on the economic implications of those headlines. It's not so easy.
Do you see
They're
any?
not in our usual... Of course, we see some risks. But this is not our usual. They're not in our usual bag of tools. So the math is very hard. So we're talking to market analysts and see whether they have a better idea of what's going on.
Okay, yeah, we'll help you with that. I'll ask around as well, Governor.
Okay,
I think Annabelle has a question also along geopolitics as well. Go ahead,
Well,
Ben.
I mean, geopolitics, Governor, what was raised several times yesterday. I mean, it's easy to put your mind directly to tariffs, but explain how you're interpreting the geopolitical risks and what they mean for the Philippines.
In general, we think the risks that you mentioned tend to be inflationary. When they spill over into the Philippine economy, I think the result will be somewhat higher inflation. We don't know how much higher, but more inflation than before.
So Trump, the risk
Yes.
of tariffs from the Trump administration you see as being inflationary for the Philippines?
Well, not just tariffs, but in general, I think the uncertainty, the geopolitical developments, I think they tend to be inflationary, and so we're trying to get ready for that.
Okay, Governor, let me just clarify this as well. Has the central bank already put out the dates for the policy setting meetings for the first quarter of next year?
We have decided on the dates. I don't know whether the dates have been released, but we will meet 6 times next year.
Okay. Understood. And I mean, if all goes to plan, no nasty surprises on inflation and otherwise, can we treat your first meeting next year as a live one in terms of would you be open to a cut at the first meeting next year?
Yes, we would be open to a cut, given the data, of course.
Governor, understood. Governor, final question for you. What else is your wild card going into next year? What is your biggest unknown, known unknown?
We don't really have a big known unknown. So we're very comfortable where we are, but you never know what the future brings. So it's not the level of comfort we have at the moment is actually quite high. But as you know, we focus on the Philippine economy.
Well, Governor, thank you so much for your time this morning. That was Governor Eli Remolona there from the Philippine Central Bank. Of course, after they cut rates yesterday, potentially that January meeting is looking live. That's what we've just heard here this morning. Merry Christmas as well to you. But pre-markets, this is what we're setting up for the session today. Looking for a bit of weakness across the board there. You've got the yuan reference rate again, another stronger than expected fix at the bottom of your screen. More ahead.
Right, welcome back. You're watching the China Show, counting down to the open of markets in Hong Kong, Shanghai, and Shenzhen, and also in Manila, where we just wrapped up, of course, the central bank decision on Thursday and a conversation with the governor. And he just told us about 3 minutes back that they are open to cutting interest rates again. That would be a fourth time if they do it at the first meeting, 2025. He's looking at the FX markets very closely. He also confirmed that they're a lot more active than usual in these FX markets to smoothen out a lot of the big moves we're seeing in the FX space.
Yes, certainly it really has been that currency story and the potential inflationary impact of that. It's a key question or key concern for policymakers there. And what else we also heard about is just the bearing of the Fed in all of this as well. And they're saying that actually they can take their own path forward. But here you've got the outlook for Chinese equities in the session today.
Yeah, range bound slightly to the downside has been, I think, the key descriptive when you look at the last, week and a half or so. In fact, to that point, the Shenzhen Composite, which yesterday actually was flirting with the break below the 50-day, it bounced above that. It looks like it might be testing that again, looking at the early pricing moves we're seeing there. As far as the currency goes, and by the way, currency and FX and rates, because the Chinese 10-year yield is now down about 2 basis points again. So this rally is continuing right now, running the risk of pushback from officials. And really pushback on that note is really coming in the form of a currency that is strengthening. Let's flip the boards, please, as well. The fix coming through today, again, leaning into the weakness right now. Let me get more specific, right? Dollar China, 730.88. At these levels, we're within 1% of a record low on the offshore rate. Offshore, that to be more specific. That's around the 737 handle on Dollar China. A couple of stocks we're tracking here in the open today. So Tencent is one. You had a big move yesterday. As you can see, it's bucking the trend. It's bottom row, left side, 1%. Reuters report yesterday was the catalyst on the conversations around AI and Apple. The opposite to that trade was Baidu, which actually fell. A couple of other things, too, if we can. The New World Development has been in the news this week. We know about the financial problems and challenges of the company. They've spoken to the banks about extending some of these loans, and the stock is continuing to drop today, every single day this week, every single day, I think even going up to last week. SIFI Holdings is a potential restructuring story on the onshore debt. We could be looking at several options there for holders. More on that maybe later on. HKX, encouraging pieces of news here going into next year. So a couple of statements. I don't have a lot of time on this. You can read about it on their website. But one of which is they're now seeking opinions in terms of how they can further improve and ease these hurdles to get into the IPO market and for firms to be able to list faster. Chung Kong Holdings, I believe, is another story. And on that, I think this is a story over in Europe.
This one has a lot of details to it as well, actually.
This is a Hutch story,
it's to do with their Italian telecom unit, Wintra, and it's under investigation for allegedly evading 132 million euros in taxes during an asset sale. So, again, quite a few details in that. But let's shift to what's happening in Macau this morning because, of course, we've had Chinese President Xi Jinping there for a couple of days this week, marking the 25th anniversary of the territory's handover to China. He's set to attend the inauguration ceremony of the city's new administration. There's a lot of firsts with that administration as well we've been discussing. But our China correspondent, Min Lo, is joining us now from that SAR. And Min, set the tone for us. What's the mood there on the ground?
Yeah, you really can't miss the festivities happening because there are so many Chinese flags just fluttering along the roads, over buildings, congratulatory banners, and of course a lot of police presence, at least near the event venues. And when I speak to local people here, I really meet two camps of people. Many of the local residents feel that it's not a big deal. In fact, it's a bit of an inconvenience because of the road closures. But there are some who are extremely enthusiastic, especially in fact those who come from mainland China. I met some who especially took the day to come from Guangdong, from Shenzhen, to come over to Macau to watch the flag raising ceremony this morning. It's an extremely momentous, historic occasion for them, marking this 25th anniversary of the handover of Macau back to mainland China. And President Xi, this is his third trip to the city as president. When he arrived on Wednesday, one of the first things that he said in his public remarks was to laud the success of this one country, two systems model. He said that Macau is the pearl on the palm of the motherland. And remember, the last time he came was in 2019. The neighboring city, Hong Kong, was going through some political instability, and Macau has always been that contrast, that bastion of harmony, stability. And we expect President Xi, if he gives a speech later, to continue to highlight the strength of that one country, two systems model, and perhaps to mention once again that these territories under Chinese sovereignty, they are part of China's internal affairs and shouldn't be meddled with by other third parties.
Min Min, how's the economy doing? How does it feel, especially since you're there on the ground speaking with people?
Yeah, it's a little bit quiet out here, and I spoke to a number of local businesses, residents here, and you get the sense that the economy is still somewhat emerging from the shadows of the COVID-19 pandemic. Yes, the tourists are back in full force, but local businesses are saying that the tourists coming here, they're not spending as much as before, perhaps because of the lackluster economy in mainland China as well. And of course, you have Beijing's crackdown on the gambling sector, imprisoning some of these junket operators to crack down on capital flight out of mainland China via Macau, because this is the only legal place to gamble in China. And that really hammered the VIP gaming segment, with analysts saying that next year we're expecting the VIP gaming segment to only recover to just about 40% of pre-pandemic levels, although the mass gaming sector is expected to recover much faster to over 110%. But still, it highlights both the strength and the weakness of this economy to be so incredibly reliant on the casino sector. It contributes to over 80% of tax revenue now, and that's why the government has been wanting to diversify the economy. The new chief executive, in fact, warning against what he calls the barbaric expansion of the gaming sector, and said that it's restricting choices for young people in terms of their career options as well.
Yeah, I think you've sort of been alluding to that there, Min Min, that Beijing's plan for Macau seems to have shifted a little bit. So what's the new sort of approach now that's being built?
Well, you can tell from President Xi's itinerary, he visited a lab for traditional Chinese medicine and space technology in a university, and those are likely to be priorities. We know that Beijing wants this place to diversify its economy, to build up the traditional Chinese medicine sector, to turn it into an international destination, not just for tourists, but also for MICE events, conferences, and a tech and commerce hub as well. And at the same time, we know that President Xi has been talking about integrating Macau, Hong Kong, southern China into that greater Bay Area. He called for Macau not to be complacent yesterday at a gala dinner, saying that the city should continue to attract top talent to fit into that national strategy of integration. That brings with it both benefits and challenges, because yes, it might bring in more tourists from mainland China, but local businesses say that it means they have stiffer competition as well. The small businesses will now have to compete with cities in Zhuhai, where tourists get a wide array of goods with very good value as well.
Min Min Lo, thank you so much. Our China correspondent there in Macau for us. It's a big morning. It's been a really big last 3 days or so, so we'll continue to drop in there with Min Min throughout the course of the morning. Just to recap the breaking news from earlier on, Philippine markets up and running. You have a little bit of strength coming through in the peso. We're off the highs of the day, though, if you do the opposite. The equity market's actually up for the first time in 8 days. The headline so far is after 3 straight cuts, the central bank is open to another one if the data comes in line with expectations for the first meeting of next year. They haven't made public, though, that specific date for that meeting, but they said 6 meetings next year.
All right. And then the other breaking news that's actually just crossed the terminal here is that a Starbucks union is planning to strike Friday in LA, Chicago, and Seattle. This is the Starbucks Workers United. It's a union that represents employees at 500 of Starbucks' 10,000 company-operated stores across the U.S., but baristas are planning to go on strike for 5 days from Friday in that union. It's after a late stage or final stage bargaining session reached an impasse. That's what we're hearing from the group. We'll have more ahead. This is Bloomberg.
Welcome back. After bursting onto the scene just 2 years ago, OpenAI's ChatGPT and its competitors have quickly become the dominant theme for the future of tech. But AI developers now find progress, well, slowing. That comes amid growing questions, of course, over profitability. Our Bloomberg Originals team takes a closer look.
The internet overnight.
A new artificial intelligence tool is going viral.
It's called ChatGPT.
It can answer follow-up questions. It can admit its own mistakes.
When ChatGPT came out, it really quickly gained traction. You might ask it, write a poem about unicorns, and it might spit out something that sounds just like it was written by someone. That really struck a chord with a lot of people. It also struck a chord with investors.
Tech companies and their investors have sunk billions of dollars into building AI systems with the bet that these tools will keep getting more sophisticated and one day prove wildly profitable.
There's this concept in AI that if you just sort of keep feeding an AI model more and more data and more compute power, that it will start to just sort of teach itself and become smarter and smarter.
But progress seems to be getting a little bit trickier for some of these big companies.
As expenses skyrocket, an industry known for moving fast and breaking stuff could be slowing down.
I think the progress is going to get harder. When I look at 25, the low-hanging fruit is gone.
They're trying to figure out how do we make these models that are getting increasingly expensive, eating up increasing amounts of computing power, worth that trade-off, right? If you're not getting this incredible boost in performance, what do you do?
ChatGPT and AI systems like it work by using massive software engines called large language models, or LLMs.
A large language model is an AI system that's trained on lots of data sourced from the internet typically, and it can respond to written prompts with other amounts of text that sound really like they were written by a human.
To do this, these models use an algorithm to process the parameters of any given prompt. And this is how that unicorn poem comes into being.
For a while, these models have been getting better quickly. But right now, at least 3 of the top companies, OpenAI, Anthropic, and Google, are having issues training their models to the level where they would like them to be.
As we're spending more and more money, the engineering complexity of getting it right is increasing, and that's why companies need to be larger, need to have more talent.
It's hard to say if anyone's making money off of AI right now. We do know that OpenAI has quite a number of paying business customers, but we don't know how that breaks down in terms of like the exact number of companies that are paying for it or what kind of benefits these companies are actually seeing.
But it's not all about the money, is it? Let's keep in mind, OpenAI, for example, was established as a non-profit research company focused on advancing AI for the benefit of humanity. Of course, it plans on shifting to a for-profit model, but the timeline on that is unclear. And still, despite the wintry forecasts, the money keeps pouring in.
They have plenty of money at the moment, but it's not totally clear if companies are going to be using it long-term, what kind of return they're getting on their investment.
Perhaps the most exciting thing for AI enthusiasts, and the most horrifying for its detractors, is the prospect of artificial general intelligence, or AGI. AGI would be a system that can reason and think like a human, applying its synthetic brain across disciplines. not just reacting to prompts with poems or six-fingered hands, but accomplishing complex tasks independent of us humans, and maybe even surpassing us. Could we one day be working for them?
No one exactly agrees on, when we're going to reach AGI or what exactly it will look like. A lot of people are predicting that it can come very quickly, right? You see other people saying it could take decades, it could take a century, it could even never happen. And something like some of these setbacks that we're seeing give people reason to maybe reassess or say, hey, this path to AGI may not be as simple as some wanted.
You can catch the full documentary right now on the Bloomberg terminal or Bloomberg.com. But we're going to get more with this now, this topic. Jenju Scott is the founding partner at AI and deep tech focused investment platform In Capital, joining us this evening. Jen, we just heard there about maybe how the AI giants, that low-hanging fruit is gone, and there's these challenges that are facing them to sort of keep up with that high pace of innovation we've seen so far. Does that sort of reach ahead, do you think, in 2025?
I do hope so. I think in terms of conversational type of large language model, in the past months, we have seen a significant slowdown in terms of the progress. Video generation-wise, actually making a little bit more progress than conversational. So in many ways, we can say that the scaling law hit a wall in terms of language-based conversational type of GPT transformer that is not really significantly improving. So this kind of plateau does make investors pause in terms of where is the short-term ROI, especially when it comes to large language model-based infrastructure, often require tremendous amount of data, tremendous amount of compute, and therefore also very large number of electricity consumed. So there are probably a handful, 5 companies in the world really can afford this kind of infrastructure, and most of them are private company. Most of them are public company. The only private company, OpenAI and Anthropic, are backed by public companies. So that does beg the market starts to question, with all this investment and we see a plateau, when are we going to see some short-term return?
Yeah, that question around ROI is certainly a really major one. I've been speaking with different people, and they would tell me from sort of at least a public perspective, maybe at this point there's been a bit of an over-indexing on large language models. In terms of the investment trends then, do we start to see direction into new areas?
So I think many companies have already started betting on alternative areas. If you compare it to the US and China ecosystem, the Chinese players were forced to focus on inference and a more efficient model earlier on because of the advanced GPU access issues. And in the US right now, even for companies like Microsoft, they have been hedging with a much more efficient model like 5354 that although they are actually main investor for OpenAI. So I do see 2025, there will be more reconcile in terms of the efficiency. How do we more utilize inference? How do we make small model to be more applicable instead of creating this kind of godlike AI? Another convergence I start to see people's belief, almost like people's belief system. It's if you think about the last industrial revolution, human labor has become obsolete. In this intelligence revolution, that we potentially make human intelligence obsolete. To me personally, I don't want to live in a world where human intelligence is made obsolete. So the kind of convergent thinking is that, do you create AI that's replacement of the human intelligence, or do you create this kind of AI that's complementary? If it's complementary to human intelligence, probably consume less compute and use less data, but also use less energy, therefore financially more efficient as well. And we're seeing a lot of this kind of application coming out from China.
Yeah, so that does sort of seem to be the difference that sort of is becoming apparent now, that you do have sort of big tech in the US that's chasing concepts like AGI or artificial general intelligence, for instance. In China, the base looks a bit broader, and we've seen sort of these smaller language models that are targeting more of a specific domain, being a bit more efficient in the way they go about things. How do you see the outlook then for regulation, or the lack of regulation we see in the US, playing into that? Because if anything, it makes these big tech companies more powerful, and that gap also starts to widen even further.
Good question. I think I have a lot to say about AGI, by the way, artificial general intelligence. I'm very skeptical. If you truly understand how human brain work, and by the way, as species, we don't really understand how our human brain really work. Compared to right now, AI, human brain is millions of times more efficient. And many people talking about AGI right now, often none of them will be able to give a very specific definition, detailed definition of what does that mean to be, general intelligence. Most of those definitions are very vague, and they're moving target. So we have to ask ourselves, are we building good enough AI that can increase the productivity, save cost, and release human from very arduous, repetitive type of task? Or do you actually create this very centralized AI companies that occupy an enormous amount of data, compute, and energy consumption, create this kind of tension between Annabelle, you asked about regulators. The real tension right now is actually not between different nations. The real tension is between this kind of digital nation created out of very centralized artificial intelligence, private companies with the power concentrated in a few individuals' hands versus nation state. So I hope 2025 will be the year people start to recognize we don't actually need to chase AGI. The most practical investment should be the type of AI that can really improve the quality of our life, can liberate us from repetitive tasks, and become complementary to human intelligence instead of replacement.
Yeah, to that point, I think we can make clear that a lot of people would also say that AGI may never even come to fruition. But I think you were just pointing there maybe to agentic AI, but talk to us about what you would see as sort of in our everyday lives, what's going to be the top change that we see next year as a result of this new technology.
Yeah, I think in terms of general intelligence, we have a hard time to define, our human brain's intelligence, how does that work? So we need to do that first before we can move to artificial and general intelligence. But in terms of practical AI, I can see small enough model, localized agent be popularized from China's EV. China's EV is making tremendous growth over the past year, and this growth probably will accelerate. And I think this kind of localized AI will be popularized through EV, and we will start to question this kind of interoperability between our interaction with the smartphone-based AI and electric vehicles.
All right, Jen, I'm sorry, that's all we've got time for. That's Jen Scott there, founding partner at AI and deep tech-focused investment platform In Capital. We'll have plenty more ahead. This is Bloomberg. Welcome back to the China Show. Here is a look at the Hang Seng half an hour into the session. Actually, when you've got sort of that broader pressure for Asian equities, because you were just pointing out there, Dave, longest losing streak since April. Sorry, I've taken your piece of information.
What do I say now, Bob?
Oh, man. Well, you can take some of mine. SMIC is really leading at least the gains that we're seeing on a sub-index level this morning. Tech is standing out to the upside, and there is a story that we've been looking at, could be a day two reaction to further support that Shenzhen is putting in place to try and boost the AI industry there. So some subsidies that are in play could be lifting the likes of SMIC.
Could be, yeah. But that's really just a very few bright spots, one of the very few bright spots across the region today. Tech, as you point out, most sectors are down. As I see on my screens, volumes are on the lighter side of things. In terms of technicals, we might actually be very close, if not there already. So we've taken out the 200-day moving. In fact, we've taken out 3 moving averages in the last week and a half or so. We're nearing oversold terrain on the MSCI Asia Pacific benchmark. 8 shares at the bottom of your screens are effectively flat. We're also looking at several themes going into this weekend, and of course, one of the big events this week in Greater China is the president's visit to Macau, and I believe, of course, we'll be getting more on that in a moment. But just a look at Greater Bay stocks on this integration theme, really across the GBA space, right? Greater Bay Area, and it's not just a casino play. You're looking at infrastructure as really they link more of these economies together. And by the way, right, since we're talking about this too, later on in the show, we'll have really one of the group that runs some of the most well-known F&B places in Hong Kong. And we'll try and see how they're actually changing and looking at changing their strategy given the flows, the tourism flows, visitor flows, and the changing demographic of just the white-collar populace here in Hong Kong.
Yeah, well, we talk a lot about sort of the northbound flows, but what about the southbound? Because I think there's been a couple of measures that have been announced. We saw, for instance, the visa relaxation just a couple of weeks back
for Shenzhen
residents into Hong Kong, so that could be a supportive factor. And of course, when you take a look at the visas that are being issued, where are the majority of those going to? It is to people in mainland China as well. So it's certainly a changing face of the city, not just in terms of, as you said, the white-collar people that are working here, but also who are the people that are on the streets, the tourist arrivals as well. But here we're actually taking a look at a live shot of Macau this morning. President Xi is on a 3-day visit to that special administrative region. You can see a picture of him there. But we do know that Beijing has plans for Macau to revamp the outlook for the city, shift away from VIP gambling, move into sectors as far away as space. But let's get more with our China correspondent, Min Lo, joining us from Macau this morning. And Min, talk to us about this significance, because we haven't seen Xi, at least publicly, in Macau for a few years now.
Yeah, the last time he was here was in 2019, and again is the 25th anniversary of the handover of Macau back to China, and it's a very significant milestone, again highlighting the strength, or at least in President Xi's words, is the strength of the one country, two systems model with Macau characteristics. He's here to really hail the success of Macau as this bastion of stability, harmony. He's going to give a speech later. We're just a couple of minutes away from the Macau Dome, where the inauguration ceremony of the new incoming chief executive is just about to start. We can't bring you right there at the venue because of the security cordons, but President Xi will be swearing in Sam Ho-Fai, the new incoming chief executive. And we know that this is a man who, for the first time, doesn't come from the business background. He is a former judge, and some analysts are saying that this raises some doubts and questions about the future of the world's largest gambling hub, because Sam is someone who has previously warned against what he calls the wild and barbaric expansion of the gaming sector. He said that it has limited the choices of young people's career. So he is vowing to diversify the economy, move away from gambling into things like traditional Chinese medicine, tourism, as well as turning this place into a top destination for hosting events, conferences, as well as a commerce and tech hub.
Yeah, Min, to your point, the swearing in is happening, in fact, right now. Where you're, Min, can you talk a little bit more about that? So you mentioned things like traditional Chinese medicine, things that I guess for most people, they don't normally associate with a gambling hub like Macau, for example. And a lot of thought, and it was fairly deliberate, the places and the companies that President Xi visited over the last 2 days or so, Help us understand what the visit has been like so far and what we can glean from the items on that agenda as far as policy priorities are concerned for Macau.
Yeah, President Xi's trips are never random. His itinerary are always very carefully planned. You can get a sense of what the priorities are based on the places that he visited. So he went to a lab for traditional Chinese medicine and space technology at a university. That suggests that these are some of the priorities for the city right now. And in some ways, the city has achieved some progress in diversifying the economy because the casino segment, it still contributes about 80% of tax revenue, but in terms of GDP, used to contribute about 60% of GDP, and now it's less than 40%. President Xi has been also talking about integrating Macau into the Greater Bay Area, with Hong Kong and southern China. He talked about places in Zhuhai City, getting Guangdong province, Zhuhai City, to provide more opportunities for Macau residents. And that integration brings with it both benefits as well as challenges because, yes, it's going to make it easy for Chinese tourists to come over to spend more money, but then it's also becoming more interconnected, and Macau's economy could become more dependent on the mainland Chinese economy. If the Chinese economy is weak, you're going to see that show up in the spending power of the tourists here. And local small businesses say it's going to be more challenging for them because now they face stiffer competition from other businesses in Zhuhai, which is across the border in southern mainland China, where tourists can get a wide array of goods for very good value of money. So there are challenges and opportunities here. And Sam, the new chief executive, has vowed to do more to address some of these issues related to people's livelihoods.
Yeah, we're actually seeing, Min, to your point, the ceremony is taking place right now. We're seeing live pictures here of President Xi Jinping shaking the hand of various government officials. Standing next to him is the new governor, Sam. Talk to us about the first that we've got here. He's the first governor to have been born in mainland China. He's the first person not to have come from a business background to be leading the city. What is the appetite, though, for change from Macau residents as well?
Yeah, I talked to some Macau residents, and there are two camps. There are some people, in some ways, there's a little bit of apathy here because ordinary citizens here can't vote for the chief executive. Sam is pretty much endorsed by Beijing. He was overwhelmingly elected by this 400-strong election committee made up largely of Beijing loyalists. So local people don't exactly feel that they have a lot of power to shape who the chief executive and his vision for the city. And so there's some people I talked to say that they just feel that yes, President Xi is here, but they feel that it's a little bit of an inconvenience because there are road closures. Although the Chinese mainlanders, they are the ones that are really enthusiastic about this event. I met someone who told me he couldn't sleep last night. He was so excited to travel to Macau to witness the flag-raising ceremony today, to be in the same city as President Xi, hoping to catch a glimpse of the leader himself. And so you get a sense of the differences in sentiment here between the Macau residents and the mainland Chinese residents.
Right, Min Lo, our China correspondent there in Macau, and we understand that President Xi is likely to speak in a few minutes. We'll bring you that once it happens. Right, in the meantime, there are other things happening. We're looking at the Philippine peso right now and the equity market. So we're snapping, I think, 7 days of losses. We had the central bank decision yesterday, cut for a third time. They're open, they say, to another one at the first meeting next year, and that really is fairly consistent with what other central banks and where markets think those central banks will be this time next year. It's been a hectic week. The Philippines is just one of over 15 central bank decisions recently. In fact, the last few minutes we've seen Costa Rica also come out with a rate decision there. And as the dust settles, here's the outlook for next year as central banks not just look at rates but look to really defend their own currencies. And there's a line coming out of Indonesia we'll get to in a moment there. And actually, in fact, Bill, why did you mention this right now?
Well, just to that point, I mean, there's the currency risk, and Bank Indonesia is saying that they're going to be guarding the rupiah boldly in order to be building market confidence. Really, it has seemed to be that the rupiah is is in the driver's seat for where the direction of Indonesian rates goes from here. We did see that hold, but in their forward guidance, they still indicated that rupiah stability is the top priority.
Yeah, and I think, let me just borrow again the parts of what the Philippine Central Bank Governor told us earlier on. You know, it was not surprising that they're more active in the markets, it's number one, and that, you know, some of the thresholds according to their previous models of what caused, at what level is the currency weak enough that it causes inflationary problems for them. He said that's a fluid concept right now, and that they're trying to figure out what those thresholds are almost on a daily basis.
Well, I think when you kind of look back to the dynamics that's driving that, and I mean, Governor Eli made that point to us, it's not so much a weakness in the Philippine peso, it's more about that dollar strength. And what drives that is the outlook around Fed easing for next year and also Trump tariff risk. And these are really two big factors that are in play.
Yeah. So, suffice to say, dollar strength likely continues. Let's bring in Marcus Wong, our Bloomberg EM macro strategist in Singapore for us. Marcus, I'll give you a statistic. 11 out of the last 12 weeks of dollar strength. One of our guests in the last hour, said DXY could hit 112, 115 over the next few months because of everything that's happened this week. What's your view?
Hey, I mean, let's just look at the decisions over the past 2 days or so. I mean, the Fed was definitely more hawkish than I expected. On the flip side, if we just look at the G10 central banks, BOE was more dovish than expected. Similarly with the Bank of Japan. So I think it's safe to say that the path of least resistance is definitely for dollar strength moving forward. And I think no one should bet against a bullish dollar at this point in time. I guess, as you mentioned earlier, and even throughout the interviews that we've done, with the central bank governor earlier, a major concern for policymakers out there is what do they do moving forward. The dollar doesn't look like it will settle anytime soon. With Trump coming in his inauguration and with his policies that he has, proposed previously, it seems very unlikely that, we might see a dollar descent. I think, the market, even before the, let's say the December decision, some people were calling for a dollar dip in the first quarter, essentially on Fed rate cuts. So of course, that idea has really been thrown out the window following the decision this week. So again, part of the least resistance looks like for the dollar to move stronger moving forward. So I think it's really something that investors as well as policymakers are quite concerned about moving forward.
So Marcus, what has been the response so far from policymakers, and can they actually continue as well in that similar vein?
Well, I think we just had an interview, with the BSP governor. Again, let's start with the BSP and the peso. I think it's been hovering at 59 even before and after the Fed rate decision. So obviously, as he mentioned, they've been active in the market, but all central banks will face a trade-off. Defending the currency may mean burning through their reserves. Not defending the currency may mean high imported inflation moving forward. So again, and as you mentioned with Bank Indonesia, I think moving into that decision, there was some considerations there were some analysts out there, a sizable minority actually, that were calling for an actual rate cut. But I think again, they stood their ground and said that rupiah stability is at the forefront of their concerns, and therefore they are keeping their rates unchanged. So again, the point to this is that a lot of policymakers out there, they see currencies weakening is something that they are not they are trying to work against. But against a stronger dollar, against a king dollar, it's very hard to move against this bullet train. And many policymakers are obviously very reluctant to draw a line in the sand. Obviously, they might invite speculators if they do that. But it also means burning through their forex reserves unnecessarily. So, point with this is that with where the dollar is likely to be headed early into next year, we could see EM currencies weakening as a result, and also, of course, currencies breaking past key levels.
Right, that's our Bloomberg Emerging Markets macro strategist Marcus Wong joining us from Singapore there. And coming up, taking a look at the outlook for F&B in Hong Kong, we're going to be speaking with the Hong Kong-based hospitality group black sheep restaurants. Joining us in our studio here, again, what's happening with consumer sentiment, how that's shifting, the dynamics that are changing in Hong Kong. More on this ahead. You're watching Bloomberg.
Today, San Francisco Fed President Mary Daly sits down with Bloomberg Surveillance for an interview on the latest Fed rate decision. Tune in today at 7:30 Eastern, only on Bloomberg.
Okay, here we go again, almost like clockwork. The debt ceiling, government shutdown, government funding issues again resurfaced. Surprisingly so, in fact, when you look at something of the risks that we were really not expecting this week. So the headline today was, well, a few hours ago to be more specific, the Republican-led House has rejected this temporary funding plan backed by President-elect Trump with less than a day to go before this government shutdown. Let's bring in Jill Deeses with us right now to just get us up to speed over, not a lot of people were expecting we'd be in this situation, yet here we are.
Yeah, no, I don't think, prior to this, anyone, Republican or Democrat, thought that a week before Christmas there would be an issue with this. I think that the general expectation, remember, there was a bipartisan legislation that was ready to go earlier this week that everybody kind of thought, well, it's going to go really smoothly. They'll get that passed, and then they'll just deal with it again in March when this issue comes up again. But it's obviously not what happened. Instead, what happened is you had Donald Trump, president-elect, get involved, Elon Musk, who's obviously bringing in to his new administration to run like a government efficiency deal, get involved. And instead, what we got was a much shorter bill, this Plan B bill, 116 pages versus a 1,500-page bill that had broader bipartisan support before. And what we just saw a couple of hours ago was this bill failed pretty miserably. The House Speaker, Mike Johnson, needed a two-thirds majority, didn't really come close to that. 38 Republicans voting against this. And now we're kind of in this situation where there's not really clear what's going to happen. The House Speaker has another 24 hours to try to get something together. He can try to get this bill that had Trump's backing, through another vote if possible. But after a failure like this, it's kind of hard to see that, and kind of leaves us in a position where it's not really clear where exactly we go from here.
What is the what's the Elon Musk dimension? Because he's definitely inserted himself into this debate. Elon Musk and Donald Trump singing out of the same hymn book on this problem?
There's a lot of different moving parts here, right? So from an Elon Musk perspective, again, because he's made this big issue out of government waste and inefficiency, he looked at that earlier bill and said that there were all kinds of little provisions in there that he wasn't particularly happy with. The initial bill, looking at, defense spending. You also had some elements of just little different bits and pieces there that were kind of technical that Elon Musk wanted, sort of pulled out of that. The resulting bill actually did still include, various provisions for, I think, $100 billion for disaster relief after the hurricanes that happened in the southeast in the U.S. This fall. You also had, some other provisions there. But I think really the bigger sticking point here as well is this issue that Donald Trump really wanted to capitalize, which was effectively suspending the debt limit for another couple of years. It's really interesting to see Donald Trump kind of jump in on that, because in some ways, I guess it makes sense, because, if he doesn't really have to worry about a debt limit for at least a couple of years, he ultimately kind of wants to get rid of it entirely. That might be able to help him get through some of his, some of the legislation that Trump is really interested in. But that actually leaves Republicans in a really difficult position, because Republicans have historically been really aggressive in arguing, against raising or suspending or abolishing debt limits. And so you're putting these guys in a pretty politically difficult situation, and now ultimately have created an entire debate about debt limits with 24 hours to go before the government shuts down that didn't, again, need to really exist in the first place. So again, just really fascinating developments to see here. And as I said, just really not a ton of idea of where this kind of goes forward right now.
Yeah, I wouldn't say it's a Christmas gift for for anyone in U.S. politics. But that's our Bloomberg desk editor, Jill Deeses there. Thanks so much for joining us. And just leaving you here with some live pictures. We've got Chinese President Xi Jinping of course, he's in Macau, 3-day visit. He's just inaugurated a new government led by the first person not to be born in Macau. But listen in.
澳门是镶嵌在南海之滨的
Macau
一颗璀璨明珠，
is a jewel
是伟大祖国的
South China
一方宝地。
is a treasured land
中国
of
最
China.
早一批留学生
The first batch
从这里
of
走向世界，
Chinese students who started
不少
abroad
中华经
start
典
set off from this point
在
from
这里
Macau.
经翻译
Most of
传
Chinese
到西方。
classics were translated
西
in
方
Macau
近代科学、
to the rest
技
of the
术、
world.
文化
Modern
不
technologies
少经澳
and
门
cultures from
传
the
入
West
中国内地，
also introduced and
在不同历史时
transmitted
期，
through Macau.
澳门
In different
都
historical
扮
periods,
演着
Macau
重
has
要
been
角色。
playing
Right, welcome back. You're watching the China Show. Here's a market update for you. A milestone on the Chinese one-year borrowing cost here. One-year yield down to 1% for the first time in 15 years. So the rally is certainly continuing there. On the 10-year side of things, we were down two basis points. So futures are pointing to the upside in the bond markets. Again, we're going into the weekend. And it doesn't seem that, I think for now, traders are concerned that they might run into pushback here. Certainly, the direction of travel and rates is down, and certainly why not, even despite these valuations right now, Bill.
All right, and Hong Kong as well, the stock exchange looking to relax some IPO requirements at a time when the city, of course, is trying to revamp its stock market, fill that IPO pipeline going into 2025. But let's get more with Manuel Bagori. He leads our deals team, joining us in Hong Kong this morning. So what are the changes we're expecting, and what sort of time frame would they be enacted as well, do you think?
Annabelle, yeah, it was quite interesting to see it yesterday evening, and we've seen how Hong Kong has been struggling and trying to kind of like catch up and get some steam again, and there's been some second listings, right, from mainland traded companies. With this consultation paper just released on Thursday, what they're trying to do is just make it slightly easier for those listings to happen. So, for instance, a number of things were touched on the paper, but for instance, they are trying to make it easier for cornerstone investors, right, who are really, really critical on the IPOs, for them to be able to sell part of the shares that they bought into after 3 months, rather than having the lockup for 6 months. So that will make it perhaps more enticing for them, especially in times where there is more volatility. Another measure is they are trying to reduce or seeking to see if they could reduce the number of shares that these mainland companies need to sell in Hong Kong. That's another measure to try to make it more palatable or easier for them. Perhaps the third measure among the main ones that they're touching on is the so-called clawback, right?
Yeah, sorry, we're out of time, Manuel. That's the trend they want to change. Read about it on the terminal. This is Bloomberg.
Taking you back to these live pictures in Macau this morning, we've got President Xi, who's just delivering an address as we bring in a new government, a new leader for that special administrative region. So far, what we're hearing out of that speech this morning is that President Xi is talking about promoting a healthy development of the gaming industry. We know that they're very keen to establish alternative new growth drivers for the area as well. For instance, space is one of those that's come up, traditional medicine. But we do want to talk about also the outlook for how GBA is changing as a whole, because there has been sort of the changing dynamics. It's also being felt in Hong Kong and further integration that we see between mainland China and the city here, and the changing makeup of the city as well. So let's get more about how that's having a bearing on the hospitality sector. Bring in the man who really is behind so many of the well-known restaurants in the city, the founder of Black Sheep Group, Black Sheep Restaurants, that's Syed, Asim, Hussain, joining us this morning. So we were just discussing there about how Hong Kong's makeup, and I think everyone feels that, the changing face of the city, less of a focus on sort of expats from Western countries. We're seeing a lot more people coming in from mainland China, and this is the new Hong Kong.
Of course. Well, good morning, Annabelle. Good morning, David. Thank you for having me. I also appreciate the compliment embedded within the question. I appreciate it. Look, it's true that the demographics of the city have changed. You know, we've lost 100,000 expat families over the last 18 months. We see more and more mainlanders moving to Hong Kong, not just for travel and leisure, but also building roots over here, calling the city their new home. So it's absolutely true that the demographics of the city have changed.
You can actually remove that. Don't worry. Yeah, I know it's coming in loose as well. Yeah, there we go. Thank you so much. Well, okay. How's business? How's business recently, and how have things? I mean, is it comparable to pre-pandemic? Is it a useful exercise to even compare?
Look, it's a tale of two halves for us. The first 3 quarters of this year have been very difficult. We were hoping that we'd start seeing a sort of COVID comeback story, similar to what other international towns like London, Paris, New York saw in terms of restaurant and retail spending. That party didn't happen for us this year. Parts of this year, especially around the summer, were very prickly. But I'm also really happy to sit over here and report to you that we've seen signs of stabilization and growth beginning last quarter this year. So overall, I think we're going to finish the year 3 to 4% down, but our fourth quarter performance this year should beat fourth quarter last year. So it's kind of mixed results.
I can just follow up on that as well. Because you guys are opening up new places as well. So when you compare it to last year, is that same store sales? Like how do you measure growth in aggregate, for example?
Look, David. So we have this sort of view. We're off Hong Kong, by Hong Kong. We're very optimistic about our Hong Kong chances. We believe in a Black Sheep comeback story, a Hong Kong comeback story. So we're spending $30 million US on new development next year. More than half of that is going to be in Hong Kong. You and I just off air were talking about the Peak and Rajasthan Rifles. Rajasthan Rifles is not going to be the only Black Sheep restaurant on the Peak. We're opening 5 new restaurants on the Peak in the next 6 weeks. So we're risk on, you know, and all of this kind of derives from this conviction that we have that there is going to be a comeback story in Hong Kong, and commercial rents are not going to be at this level again. So I don't see next year being a happier year. I think next year is going to remain challenging. There will be headwinds, but you know we're trying to play the long game. And our conviction, our thesis, as I said to you before, is that rents are never going to be at this level again.
So you're sort of trying to take advantage of that weakness in that part of the market to expand. Then?
Yes, you know. So we are, you know, I said 30 million in development funds. Half of that we're spending in the Middle East and in Singapore, but the other half is all focused on either scaling existing work in Hong Kong or developing new content for the Hong Kong market. So we very much are, we continue to be risk on for the Hong Kong market.
That fourth quarter pickup that you saw, was that also based on any sort of adjustments that you made to your business model, linking it back to the changing face of the city? Did you find that you actually had to rethink your strategy as well?
Look, you know, Annabelle, that's a great question. We've had to make some tactical shifts, and if I tell you everything, my team's going to kill me. But we make some tactical shifts, definitely. But I think also the sentiment today, or the sentiment beginning of the fourth quarter, was more positive than what we had in the city quarter 2, quarter 3. So I often say that how we're doing at the restaurants is a good indicator for how the economy is doing. You know, what people are coming. I'm going to be looking after 4,000 guests tonight, and how they feel about their consumer discretionary fund, how they feel about the Hong Kong economy. I'll be able to see it in the restaurants through how much they're spending, how much they're ordering, what kind of wines they're opening. So in that manner, I think restaurants are a very good barometer for consumer sentiment and consumer confidence.
I mean, this might be anecdotal, But the notion that people are drinking less alcohol,
Yeah.
am I overthinking that?
That's definitely true.
So it's happening.
100%. So,
Okay.
I said to you earlier that we're 3 to 4 percentage points down this year in terms of sales, but the number of guests that we've looked after this year is the exact same as last year.
Yeah.
We looked after 1.25 million guests last year. We're going to look after 1.25 million guests this year. So that data hasn't changed. So where is this drop coming from? It's coming from a drop in wines and spirit sales. And then beyond that, so very broadly speaking, we play in 3 different segments. And we call it casual, premium, luxe. Casual, you're spending 50 US. Premium, you're spending 100 US. Luxury, you're spending 200 US. So my casual and premium segments kind of remain strong. The drop that I'm seeing is at this high level. And a lot of that drop comes from, as you and I were just talking about, wine and spirit sales. And then if I can add to this, there's a global kind of thing at play over here too. That just the younger generation is drinking less than I was. My first job 18 years ago was in New York, and the amount of money we were spending on going out to bars or restaurants or clubs, the younger generation is spending their money differently. So that sort of is the delta.
What did your Lux group, like that high spender, what did it look like pre-COVID, and what does it look like today?
My chefs don't like it when I say this, but Annabelle, I think that segment, that fine dining segment, sort of is in trouble. And that's not a Hong Kong phenomenon. I think that's a global phenomenon. I call it the tyranny of the chef. The tyranny of the chef is over. So I think the era that we're entering, these long degustation menus, tasting menus, where you're chained to a table and you're getting course upon course upon course, that's done. I think that the world that we're entering, and a lot of our work is going to be, and a lot of our new content is going to be around this. It's going to be accessible price point, and a deeply experiential dining experience.
Right.
This is what the younger generation's asking for. And we were talking about demographics. I think this is the main thing at play, and this is happening not just here, but also in other Tier 1 restaurant markets. I think that the fine dining game is going to narrow down, where it increasingly becomes a winner-takes-all game. So right now, perhaps we have 300, 400 fine dining restaurants in Hong Kong where you go spend more than 300 US for dinner per person. I see that dwindling. I see that dwindling quite drastically over the next few quarters and years.
And that's, to underscore the point, that's more a behavioral issue, a change. And what does it also mean for margins, for example, for a group where you oversee just this whole wide spectrum of price points?
Look, David, again, fantastic question. The biggest adjustment that I've had to make this year as an entrepreneur, as a restaurateur, is I've had to kind of make peace with the fact that these restaurant margins that we were used to 10 years ago, they're gone.
Okay.
So and there's a lot of sort of global economic pressure on all our costs. So the days of margins being in the high teens or high 20s, those days are gone. Now, if we can deliver 10 to 12% on the bottom line, we give ourselves pats on the back and high fives. It's happy days. So that's the biggest kind of expectation adjustment that we've had to make, that these margins that we were seeing in restaurants 10 years ago, that's done. And if you're waiting for those margins to return, you'll be waiting a long time.
If I don't want to, on Hong Kong, and I think Belle has a question in the Middle East, do you worry about how do you look at competition? And I'm just trying to figure out, when you come up with a concept, you have this much money, of course, to invest next year. Is competition even a consideration, or is it just
David,
you have the best product, you think?
I think we do.
Well, clearly you do. Okay, clearly you think that. Yeah,
thank you so much for saying that. And I'll give you your gift card offline.
We're not allowed to accept gifts. That's policy.
Yeah, that is
I'm just getting us out there. But anyway, go.
So I think that we are one of the better operators in this part of the world. Having said that, though, competition is a really positive thing. This means that there's an opportunity set available that these operators are looking at. We heard the story of all these mainland operators coming, but this has been happening since I started Black Sheep 12 years ago. And that, to me, shows signs of life in the Hong Kong economy. So I look at that as a positive thing. That makes me feel a little bit more confident about this 15 million US investment I'm about to make in this market. So there's nothing problematic about that, and it just keeps us on our toes. I welcome competition.
Middle East, I mean, it's been such an interesting sort of dynamic to watch, the growing relationship we see between mainland China, Hong Kong sort of being the conduit to the Middle East as well. How does that work for you?
Look, one thing I'll say about the Middle East is that everyone's really bullish in that region for restaurants and retail. The streets are not paved with gold over there. It's going to be challenging. So we're opening our first restaurant in Dubai in about 6 months. Very soon after that, we'll be in Abu Dhabi. And I tell my team this sort of very loudly and clearly, that we're going to have to work really hard there. We'll have to, the way we started in Hong Kong 12 years ago, that's how we start in that market. We're not taking any goodwill from here or there. We've got to sort of re-earn that goodwill, rebuild relationships, and build trust for that market. So, yeah, there's a lot of opportunity in that market, but I don't think that anyone's waiting to give us a hero's welcome. I think we'll have to go earn our spurs there.
Thank you for taking the time to see us. Let's do this again soon. Happy New Year, and hi to your team for us. Syed, Asim, Hussain, their founder at Black Sheep Restaurants. And for Bloomberg clients and viewers as well, you can get an insider's guide on the money and the people shaking up the financial hub of Hong Kong. It's our newsletter. It's out every Thursday, so check it out. You can grab yourself, well, a subscription, if you will, bloomberg.com/newsletters. And just to update, of course, just coming out of Macau, the Chinese president calling on Macau and Hong Kong to better merge into China's development. Happy Friday. This is The China Show. Welcome back. You're looking at some live pictures. Of course, the Chinese president, Xi Jinping, in Macau, of course, inaugurating a new government, new administration there. And of course, just taking us through some of the lines that President Xi has said so far in Macau. A lot of it has to do with integration and diversifying the economy away from what most people know as more central to the gambling hub as well. President Xi Jinping repeating his calls for Macau to diversify to that point and grow new industries, and also better integration between the city, Hong Kong, to merge into China's developments. In fact, let's get more context on this, Bill.
Yeah, we've got our China correspondent, Min Min Lo, on the ground for us today in Macau. So, Min Min, we've just also seen at the top of this hour the inauguration of the new governor, Sam. So talk to us about how he is going to be implementing exactly what we're hearing President Xi talking about right now.
Yeah, actually, we didn't hear anything very groundbreaking from President Xi. He pretty much reiterated what he has been saying before. He spent a lot of time talking about the strength of the one country, two systems model. He highlighted all the progress that Macau has seen over the years, including developing cultural tourism, the healthy development of the gaming sector, the improvements when it comes to medical services, social security. And he says this is proof that the one country, two systems work not just for Macau, but for Hong Kong as well. He mentioned Hong Kong alongside Macau a number of times. And the new chief executive as well echoed that some of the developments that we have seen in Macau, attributing that to the return to the motherland and how he would continue to further integrate the economies of Macau with the national strategies of mainland China as well. And he also talked about continuing the efforts to diversify the economy, to provide better support for young people in terms of social security for the elderly as well. So pretty much very in line with what President Xi has said.
Min Min, do we know anything more specifics around this sort of diversity exercise, diversify the economy from gambling, diversify into what?
Yeah, the study actually released a blueprint last year, and right now gambling casino revenue is contributing to about 80% of this region's tax revenue. But the study has managed to already reduce the share of GDP from the casino revenues from about 60% to about less than 40%. And President Xi yesterday, he visited a lab for traditional Chinese medicine and space technology at a university, and that suggests that these are areas of priority for Macau to develop. Macau wants to be a hub for traditional Chinese medicine. They also want to build the city into an international tourism destination and also to host events, conferences, and to be a hub for commerce, for technology as well. And also, as I mentioned, integrating with the Greater Bay Area, with southern China, with Macau. And previously, the chief executive has also mentioned that they want Macau to be this conduit, this bridge with other countries, other Portuguese-speaking countries such as Brazil, Angola, Mozambique, for example. That's the importance of Macau. And also, analysts say that Macau will retain its importance as an important offshore hub for gambling, because even though the government doesn't want to encourage gambling, but they also don't want this outflow of Chinese capital into overseas gambling destinations such as Singapore and Thailand. So they will still keep this as a place, a legal place for people to gamble at licensed locations.
Min Min, keep warm. It looks, we know it's cold, and it looks even colder there, of course, with the breeze. Min Min Lo, our China correspondent, fantastic reporting out of Macau. We'll leave you with some live pictures of the Chinese president in Macau and the speech. Plenty more ahead. You're watching The China Show.
Well, this has been one of the best performing stocks we've seen, really. Pop Mart's shares in Hong Kong have jumped over 300% this year. That's partly fueled by consumers who are looking to get their hands on the firm's collectible dolls. Our China correspondent Min Min Lo explains.
In this vending machine, small boxes are for sale. The contents are known to the young adults, shelling $8 to $20 a piece for one. In the boxes, you may find cute little monsters doing warrior poses and leg lifts. They're so popular that some shops have set a limit of one set per person. Why? The quest to get the elusive secret figurine, sometimes with only 1 in 120 odds. This is what is fueling the huge numbers of repeat purchases, more than 40% in China.
My first blind box. I can sort of understand why people might get a little bit obsessive, because if you get one of these mystery characters, you can actually flip them for 10 to 12 times the price in the second-hand market. So it's a little bit like gambling.
29-year-old Elston Du is a big fan of these toys, often spending a few hundred yuan to buy 2 to 3 blind boxes whenever he happens to pass by a store.
Pop Mart released new items every Friday, so we'd always go to the store every Friday during our lunch break. We'll see what we each got from the blind boxes and exchange with each other according to our preferences.
Young adults are shelling out hundreds of dollars to buy toys of seemingly no practical value. That doesn't seem to dovetail with the broadly weak consumer confidence in the mainland. But analysts say it is precisely the economic woes and bleak employment prospect that are driving this emotional buying trend.
Nearly 41% of consumers spend between 300 to 500 RMB a month on these toys, and about 28% spend 500 to 800. So it's a lot of people spending quite a bit of money. Emotionally, I feel good about buying toys, and I feel abundant, and a little bit of this gambling mechanism, it ultimately just taps into our psychology.
Pop Mart, the leading brand behind these blind boxes, is on track to make 11 billion yuan or $1.5 billion in sales this year. Its third quarter revenue was up around 120%, and its share prices year to date has gone up more than 3 times. Analysts say this is more than a short-term fad.
Blind boxes is a big category. It's not only about toys. There's also leftover food blind boxes. There is kind of a dating match blind boxes. I think the China phenomena is definitely pushing the boundaries of what blind boxes could be to the next level.
It might look like something ordinary with no value at all. It can't feed you, but for me, the emotional value it brings is very precious. You spend 69 yuan, and it gets you joy and good connections.
Min Min Lo, Bloomberg News.
Well, that's one stock that surged, but actually here's one that's managed to do even better. This is Lapu
crazy.
Gold. Well, it is pretty crazy, actually. This is a name that translates to old shop, and it's a Beijing-based jeweler, and they've essentially been really able to outperform Chow Tai Fook. That's a well-known name here in Hong Kong, and it's really been under pressure. I mean, we've seen it sort of slumping over the course of 2024, but this is a name, Lapu Gold, that has been able to increase their revenue nearly 150% in the first 6 months of this year. Their shares have surged rather since they listed in June, but oh my gosh, look at that outperformance there. I mean, there's I'm going to say there's no comparison, because there is no comparison.
Chow Tai Fook on a normalized chart like this almost looks like it's the x-axis.
It does.
Looking at how flat it is. And this is a company that's just gone public, right, back in June. So, I mean, I think this is the best performer on the Hang Seng Composite Index as well, which takes us, I guess, into, what the big winners should be next year. And we've done some of the data crunching here. So based on individual price targets from the sell side on individual stocks, and you extrapolate that, what it means for sort of an index target, some of the top markets that have the brightest outlooks based on those four, if they're correct, and that's a big if, of course, Brazil and Korea top that list. Interestingly, this is almost the case anyway, that the S&P is typically at about 13%. But at the end of the year, typically the S&P anyway that outperforms the rest. So tongue-in-cheek.
I mean, I was going to say, because I think sort of at least from the perspective of South Korea, it's got room for catch-up.
Yeah.
But it's also got real challenges.
Absolutely.
And one of those has been sort of that they're falling behind in the AI race. There was the expectation that Samsung could get its HBM chip certified. Hasn't happened just yet. But, OK, we've got a bit of time left. Dave?
Yes? What's this?
How many costumes do you have, and how many are you planning to buy based on the projections you're making?
Well, it's for the year ahead, it's 2. It's a Princess Leia costume. If the S&P takes out 9,000 next year, I think it's 3,000 to the downside. If the Hang Seng Index tops 30,000 by the end of next year, I will get into a Princess Leia costume, dance around. At that point, though, I'll probably be the last thing you'll need to think about. Plenty more ahead.